time again, and it is time for us to share what we know with you. So after tax season, right? After the cold winter, April 15 is done. Everybody is liberated. We are liberated, and but something else happening. So in the tax world, in the summer, it is what we call the notice season, because this is the time the IRS is sending out a lot more things to you, and you are going to realize that, oh, I'm getting this notice, and why is that? And you probably suddenly realize, and your accountant is very useful because they need to be there to help you. So here you are looking at, let me share my screen with you. You are looking at my you're looking at my website right now. Am I right? So on our website, you will see that we have this blue button. Today, I want to introduce you to this button. This is onboarding with us. If you want to be our client, or if you get an audit notice and you don't know how to handle it, you can actually come on to the onboarding with us, start uploading your information, and we'll know who you are when you upload, and then we'll contact you. So this is the best way to really reach out to us quickly and have us get onto your case very quickly. And of course, every webinars we do, today we talk about audit, right? And for small business owners, what we want you to understand is you are in business, audit is part of your business. You cannot be in business and thinking that you're going to be the only lucky person in the world that you won't get audited. That is actually by statistical analysis, it doesn't exist. Every audit, every business has a chance to be audited for different things. So you're not alone, you're not special, so you will be audited. But the difference is that some small business owners is well prepared. Even though the audit come, they can still sleep soundly and they're not worried. But sometimes some people would be so stressed out because they know they're not doing a good job. So you don't want to be one of those people. So let us kind of explain to you what type of audit are out there, so get you mentally prepared. So if someone says jump, and then you can jump. But if you look at a cliff and pushed down by others and you felt totally unprepared, right? So the audit is the same thing. If audit come. It's like you jump. You're prepared. But if you are not prepared, when audit comes, it's like I push you out of the cliff. So that is how different in the mindset and in the life happening, right? Other than that, I do want you to see our YouTube channel. And our YouTube channel, we have so many videos. If you just come to the magnifying glasses and you type on a topic, you can find videos. We are really here for you. All the knowledge here is free, and we want you to learn it. We want you to digest it. We want you to implement it. And today's webinar is the same thing, because we have a lot of audit cases coming in to our door, and when we look at these clients, we understand why they're being audited, and we want to explain to you things and make you so well prepared. Even if you jump, so what's the big deal? It's the experience, right? All right, let's just go through our the PowerPoint we prepared for you, and here you go. All right, audit, type of audit we're talking about. And in this one, we always bring the first few slides to brag about our firm and brag about myself, right? So the firm, I started Community CPA back in 1998 when I didn't really know how deep of a cliff this is, but I did jump. So I actually jumped from Wells Fargo Vice President Controller's position to a self-employed individual. It was like a big, huge cliff, but I did survive, so I'm here with you. I understand small business owners struggle. I really do. Someone said that, oh, it's so good to be in business. It's so much freedom. Of course, I do think that how you define freedom, right? But the small businesses, the differences between working for a business is that if you work for a company, the structure is there. So your worry is to make sure that the work is done. You report to one person. But doing business is not only making sure your job is done, you're making sure the whole company's job is done. Then you report to whatever clients you have. So you don't have a person to satisfy, you have the whole world to satisfy. No wonder small business owners are stressed out. We have a lot to think, we have a lot to do. But what if you're a person just enjoy that stress, There are people like that. I would not call myself like that, but I know there are people love stress. They love to be put on the cliff and they like to jump. So that is the kind of personality, and those are real entrepreneurs. Our firm had a 27 years history, and we speak collectively 10 different languages. You may say that, so what's the big deal? You're just going to hire people who speak another language. No, it is not as easy as sound. When you can get together 40-some people with different language spoken in daily basis, and what you are really gathering is a momentum. It is a momentum that everyone is the right one we service, and it's not choosing certain type of individual we serve. And so in our world, and we don't have the lens through colors, we don't have the length through dollars, and we actually just treating everyone the same. So with different language spoken and give us the full aspect of life, we really do appreciate everyone that works, live, do business in United States of America. It's a great place to be, and it is a great play field to make a world happening around you. So we have more than 10,000 clients, so that's a lot of clients. But yes, we do, and we have 5 different branches. The newest one is Houston branch in Texas, and the construction is going very fast. It's a good thing to happen. I'm so excited. Our office is coming up. So as soon as we're done construction, we will start staffing staff, professional staff, and we will be serving our clients. And here I served on the National Taxpayer Advocacy Panel for 3 years. So that is a federal advisory committee to IRS. I am also an author. I wrote 2 books already, and one is 8 a.m. and 10 a.m. and I am working on the 2 p.m. I have one more book called 6 p.m. So it is 4 books in the series about business. So I talk about starting business, growing business, expansion of your business, and retiring from your business. So it's a lifetime, we all just give one time in life. So I think, what I can think of my contribution to the society would be that, and I come up with the understanding of the business cycle. So if you're really into business, read the first book, read the second book, read the third one, fourth one. You understand in business, there's a life cycle. You can't live more than 100 years. Well, some people live more than 100 years. You can't live forever, but your business could last forever. That is why it is important to have that 2 p.m. book written. All right, no responsibility disclaimer. You know what I mean. We have done a good work to put this material together, but that doesn't mean our material is absolutely, mistake proof. Maybe we misunderstood certain things. Maybe something get updated and we just didn't hear. So there's so many reasons for something to be not accurate. But does that really matter? It would matter if you use that information, did something critical. So what I would advise you is, of course you should come over here to learn the knowledge, but once you really apply that to your personal matter, and I want you to double check, triple check, and get on consultation service with us and tap into my calendar, book time with me, and get the answer straight from me and for your situation. And I really do believe that that's the way to work the knowledge, not to just use it without some confirmation. All right, so where are the common audits? When I'm in business, I'm a small business owner. So Ying, tell me, what are the audit you have? You could name out. So income tax audit, sales use tax audit, and DOL audit, and IRS's classification audit. This is kind of related to payroll, but it's called a classification audit. So now you can see, and all of these four, they're coming from different government agencies. Income tax audit coming from federal government and the state government. So that is a double whammy, okay? Sales tax, use tax, the state audit. And the DOL, federal audit, but different agency. It's a department, it's called the Department of Labor. And what they do, the common audit they have for small business, they have all the other department or the other audit. But the one that tied a lot with small business owners is the Department of Labor audit on the fairness of wages. Then you have classification audit, which is IRS audit again. They come to make sure that you're treating your W-2 employee and your 1099 subcontractors properly. So those are the four big areas. So if you say that, Ying, I just have 1 minute to listen to you. So which one, where is that 1 minute? It's right here. It's right here. And you know that when you're in business, all of these audits are daily soup, okay? And you need to know that it's very possible for you to be audited. Does that mean you are just absolutely bad, so they come to audit you? No. For different reasons they audit you. We'll cover that. So income tax audit. This is federal and state both, not just federal, right? For the federal government, the triggering of your income tax largely coming from data mismatch. What do I mean by data mismatch? Means that you filed a $50,000 W-2, but your employer somehow was filing a $100,000 W-2. The W-2 doesn't match, so that's a data mismatch. You say, well, Ying, that never happened. So what do you mean? The W-2 and W-3 never really, the W-2 never wrong. Don't say that. And for the small business owners, you know, if you are not hiring the right data, right payroll people, and or you are giving payroll company the wrong data, and then your W-2 come out of ADP might be different from what you think and what is with IRS. So those are different things that could cause mismatch. So you want to know the trigger. And of course, data deviation scores. So at IRS system, and at government system, whether it's federal and state, they have a regular average numbers that they're looking at. For example, cost of goods sold. And if you are if you're in this geographical areas and you run restaurant and you actually this type of restaurant has a cost of goods sold to sales ratio about 35%. Then you came up with a tax return that marks 85%. You know that it will come up with a red flag. The deviation score is way too different, and you'll be audited, right? Data connection from other parties. Those are also a reason because, for example, you have a partnership and you don't get along with your partner, and before you file taxes, your partner kicked you out. So you think you are done with the partnership. No, your partner actually filed something with the IRS, with the state. Here you don't have that information, so you have a disconnect, right? So that data, and when the IRS got the company filing, goes, oh, there's a K1 belongs to John, but let's look at John's personal tax return. It's not there. Okay, let's audit him, right? That's how that works. And a report by whistleblowers, that's always the case. So if you sometimes, you experience that because of jealousy. Maybe you have a competitor somewhere, and then maybe just somebody really don't believe you. They think that you're cheating and you're, you got to allow people to do that, don't you? Because sometimes, even though you're such a nice person and you're giving all these money to the nonprofit and you have a golden, nice, good heart, but someone you just know, they just don't think you are. And they think you're screwy and you're probably drug dealers and they're going to report you. And so those are whistleblowers, and you can't stop them. They're always there. So with the whistleblowers, actually IRS will follow through. Sometimes they look at the content the whistleblower gave to them. They look at your record. They know that it's a kind of revenge and ruthless and baseless claim. Then they dismiss it. But otherwise, they would look into it. Of course, if you file Schedule E and Schedule C on 1040, and if you also have asset and cash in another country, and you claim EITC, which is Earned Income Tax Credit, child tax credit, those are also additional factors that make you more subject to taxes audit than others. So that's where the triggers. So for the IRS to come to pay attention to you with the magnified glasses. But best way to avoid that, generally speaking, you can't avoid the audit, right? So we know that. That's, IRS is hiring so many professionals to work in IRS. All they want to do is to audit people and recover the revenue for the government. So you can't avoid the audit. If you got lucky, you got lucky. Just that's how it is. But we already said a lot of those audits are very methodical. It's not because someone just hate you, so they pull you out to audit. And they need to draw you out. They need to do certain methodology to bring you out. So, that's maybe why President Trump is not getting IRS audit, because the methodology IRS uses doesn't pull President Trump's tax returns out. So, they have to go by some standards. Otherwise, it's called retaliation, right? So, really, the government is very good with that, and you should never worry about someone retaliate you and audit you. That's just not how government is operating, not how they should be operating. I have never knew they operated that way. So with that said, we continue to give faith to the government process, right? Once you are audited and defeated, you will easily be re-audited. That's just the way it is. If you got audited and they charge you a bunch of money, they probably come back 3 years later to still audit you because you had made mistake once. They want to make sure you're okay. And there's also ways to minimize your chance to be selected for audit, which is to understand the computerized system between the checkpoints. Our firm, we're really good with that, and we understand the checkpoints and also stay legally compliant. That's always easier for me standing here goes, oh yeah, do everything right. What if our folks don't even know what is right? What they're doing is wrong, right? That is where we encourage folks to come into this kind of webinars to boost up your understanding of the system. And if you just follow the rule and do good things, do the right things in the system, and why don't you worry about being audited? I think I would still soundly sleep and not worry about being audited. And of course, when you get into an income tax audit, the biggest struggle a lot of small business has is that they have no bookkeeping, they have no accounting, they have no income statement. What do you mean by balance sheet? I never even heard of that. So those kind of things just says that you're not business ready. If you are really wanting to do good in business, ladies and gentlemen, you tell me that you don't have financial statement, that's just not an excuse. That is something making me worried. If you're my kid, you're in business, you tell me that, oh, I don't even have, what is income statement and balance sheet? I would be telling you that don't even do business, because that is so essential. It's no different from going to bed and brush your teeth before that. So it's really essential. So we want to say that the best way to avoid audit is for you to have accurate and good bookkeeping and a regular accounting, and do accounting regularly and have a good relationship with your accountant, right? And hire a professional to assist you. If you know you're in the hot water, you know that you're probably not going to speak the right thing, and hire professionals to represent you. With professional attorneys, CPAs, those professionals, we can represent you without you needing to face the audit. So we will be the person running in between. We will be the person doing your work for you. And if you didn't get accounting done, we will be calling the auditor, tell that, could you give me a couple months more time? And I am going to get the accounting done first before I help you with the audit. We actually talk to the auditor and really be trying to helpful with them so they can do their job quick and easy so they can be done, right? So you don't want to deal with audit for years and years to come. And of course, state tax audit is the same thing. So either state or federal can initiate that income tax audit. Just really depends. So if the state initiated income tax audit, then you got penalized and everything. So then the federal will change, right? Because if you are charged with more income, you're going to pay more state income tax. That just means the federal side, you need to pay more as well. So in here, I listed the statutory limitation, which is something we always have people ask about that. Statutory limitation means that the auditors would not go beyond that threshold. There is a limitation of how many years they can audit. So at the federal level, it's a 3-year, right? Right now, we just submitted 2023 tax return. So the statutory limitation for the audit is 2023, 2024, 2022, and 2021. So we actually have 3 years taxes with IRS that will be easily pulled into the database, and any one of us could be audited for those 3 years. And in Minnesota, is actually the statutory limitation is 3.5 years from the date a return is filed. California is 4 years, and Iowa is 3 years, just like the federal. And the limitation applies to refund. What I mean is, let's say if you get audited, but you ended up with a big refund. If you get audited these 3 years, you can still get your refund back. But let's say if you get audited for 2021, you realize that you're supposed to get 2020 also changed because you're going to get a big refund, then you're out of statutory limitation. You can't get the refund. So if anyone needing to get money back from the state and the federal government, and you want to make sure that you have a 3-year limitation on that, that's what we call the statutory limitation. How long can the state collect on you? That is also a limitation that we want to briefly talk about. For the federal government, it's 10 years. But for the state, it can be different. California is 20, and Minnesota is 3.5. Iowa is 3 years. Isn't that interesting? So those are the things I want you to know. And we talked about income tax audit. Now, let's focus on sales and the use tax audit. So you probably just familiar with sales tax, and you never heard of anybody talking about use tax. They're not different. They're the same, just they are speaking to different audience. The sales tax are the people who conduct the sales needing to pay the tax. The use tax are the people who use the merchandise supposed to pay tax. So it is speaking to a different audience. Sales tax is more for the business owner, and the use tax is more for the consumer. But sometimes the business owner and the consumer is one. For example, if you are running restaurant, you pay sales tax, right? Every bill, every ticket you run, and you charge the dishes, then you do sales tax. But let's say in the restaurant, you bought dishes, you bought equipment, you bought your stove top and things like that. These are things you bought. And you need to look at your invoice to see whether you paid use tax or not. Because you are using it. You are the consumer. So you need to pay taxes on the asset you bought in the store. So with that, sometimes you see the state come out to audit people. They're not only asking the business owner of their sales record, they also say that, can you give me your balance sheet? After they look at the balance sheet, can you give me these items under fixed asset? And then you go, oh, but I bought it, several years ago. Oh, we still need it. Okay, and do you know why? Because they want to see whether that receipt has sales tax on it. So that is what we're saying about use tax. If you did not pay use tax, sales tax that time, you will make up that payment because you owe the state that money. So business model change is one trigger for sales tax, which I mean is, let's say if you are a brick and mortar kind of company, and now you suddenly become online sale, and those will trigger your sales and use tax. We actually have a webinar in our database where we talk about online sales tax, and you want to listen to that because it is not a piece of cake. It is actually something someone need to do. If you are doing a large amount of sales online, I would say over $100,000. If you have over $100,000 sales online, And if you have these sales concentrated in one or two states, you may be subject to that state sales tax submission. So you want to make sure you look into our webinars for that, okay? And of course, the sales tax is a little tricky because the state, they will pass the law sometimes in July, and to change the sales tax rate, the county, the city, everybody can put on something on there. So it is very fluid and a very unnoticeable changes to the area. So you want to pay attention to the sales tax news. A lot of times when we got a client, if you are, when we get you into our system, the first thing we do is to know which state, which county, which city you are in, because we will zoom into that area to make sure all of the taxes has already been set up right for you. So many times we have seen people getting the setup wrong because they bought the POS system from some other state. So the POS system didn't even have their state set up. So it has been wrong for years. Those are losses that you don't want to experience. Just make sure that you understand the sales tax. The audit is very frequent. They really are looking at your sales. They want your POS system. If you say, oh, I don't have POS system, that's okay. And then they want your bank statement. And then they will add percentage of cash sales. It's not good. So you want to have your own complete, accurate sales record. So very important. But however, if you didn't and you felt like you probably gonna screw up this audit, then you know that we're very good with audit side of practice, and you can check with community CPA. You can check with CPA firm like ours, or someone you know. Maybe your brother-in-law is a lawyer and can do that for you. So these are the things we want you to know. It is a very frequent seen audit in small business. So prevention. How do you prevent sales tax? And keep good record of sales. When file income tax return, though, you want to do what we call is a credit reconciliation. We actually making sure that your sales tax submission and your income tax submission are matching each other. Not in terms of dollar-to-dollar matching, but we want the calculation component to match. For example, your total sales, if you are a restaurant, your total sales includes 3 components. Number 1 is sales, and the sales tax collected, and what? Tips collected. So these are different items for calculating sales tax, and we want to take the 3 matches to your sales tax and reconcile them together, and reconcile the tips to the W-2, reconcile sales tax to the sales tax submitted. And those are the things we do, and that helps you to prevent you to be audited and know the different type of sales, right? So make sure that you know some sales are not taxable, like tips are not taxable for sales tax, right? So you want to know that. And when you are in the business, you retail something, but you provide consultation something. Some state consultation is not subject to sales tax, so you want to make sure you split the service so your invoice can be nice and clean. So, sales tax. We're rolling through, right? And I want to give you the most knowledge in the shortest time so that you at least hear the buzzwords. I understand when we learn something, it is not something like we heard and is remembered. And, my dad always say that for anything new in life, is actually taking 7 times different impressions in order that to be your natural instinct. So if you want to learn a knowledge, learn a language, my dad said that my dad speaks 9 different languages. So he actually said that if you want to learn a word, for example, you learn this word tractor in English, and you know that, tractor is a tractor. But for you to remember that in your head takes 7 different impressions. You might be looking at a tractor, a real tractor, and then someone repeated that word, or your head, you're repeating tractor. And you might be looking at a book, flipping the pages, you see the tractor there. Or you might be talking to someone, so it takes different ways of impression 7 times. So with the knowledge in taxes, it does take that. You'll come to the point from different angles. For example, on the sales tax audit, you might just come through, one of your friends just brought you a notice about sales tax audit. So that would be one impression. And then you yourself going through sales tax audit, that's another impression. Or you actually learn from webinars. You just was checking on webinars. You saw Ying talking about sales tax audit. That's another impression. So you want those impressions to overlap 7 times, then it will be yours. Then next time someone goes, oh, sales tax audit, you will be having so much knowledge in your head. It was not a shock. It is like, okay, that's preparing to jump, but it's not being pushed over the cliff, right? All right, so let's talk about the number 3, DOL audit. I have a lot to say about DOL audit because it happens so much for small business owners, especially restaurant business owners. So there's a lot of incorrect practice related to labor payment. But I would say that largely not because the restaurant owners is paying the people so low, is not acceptable by the federal government standard. It's actually they're paying the people such a wrong way, there's no way to track whether they paid the people enough or not. Does that make sense? So that is where I drew my conclusion because I have been in practice for 20 some years. I have seen plenty. And I have met so many DOL auditors, and I know some auditors are, very focused in their work. They're good people, good citizens, they're good practitioners. But I also have met the auditors just absolutely criminal. I just don't think they should be auditor at all. But, hopefully when you get around with the auditors and you're only meeting the right soul, the good people. And that's just what I have my wish to you. All right. What are the common triggers on DOL? And the biggest trigger is the whistleblower. So a real story. And one of our clients, the restaurant already closed, so it's not our client anymore, but it was our client, and have a cook in the kitchen for so many years. So this particular person is regarded as a family member, and this particular person did not have a social security number and just have IT number. So the business owner has been paying him cash for his salary because he has no bank account. But the business owner actually paid taxes on these money and on his behalf. So there is no such thing about the business owner is stealing money out of the government. It is just that couldn't really pay to this person on a regular way. So this person was receiving that from the business owner, and he's paid so well. And you know what he does? So what he does is that he know that if he report this business owner, because there's no proof of how much she paid him, and he will get compensated again by the government. So he actually was there for the 7 years reporting the business owner 3 times to DOL, and they got audited 3 times. So the last time it was the last straw and it closed the company. And we never knew who that person is. We just know that there is a whistleblower from the company, obviously to avoid the retaliation that the business owner don't know. But the last one went on to court. Because of it went on to court, so we ended up knowing who that person is. Do you know what the business owner's reaction on that? The business owner was so heartbroken and she passed out. She could not believe this is the person that she treated like a brother was doing that to her. So the reason I mentioned that to you is you should never do that. You should never believe that the person will hold your water. So don't even do it. Do it right. Treat everybody the same. So you don't have that heartbreak. And every time I think about it, my heart breaks. And I try not to stereotype that kind of people, and I don't trust them because of that incident. I have a very hard time I myself have a hard time to trust this kind of situation. I don't care what business owner tell me, and if they have that kind of employee, and I want them to be on paper. And even if they lose that employee, so they lose some sales, better than going on to court, spending $100,000 defending yourself, then ended up closing the business. Am I right? You hear me. So, whistleblower is the biggest one. When the employees are not happy, they report you to DOL, and the DOL investigate you. If you owe the employee $1, and then you have to pay $2 because there is another dollar called liquidated damage that imposed to the business owner. And I was told by the DOL folks that these $2 are given to the employee. So what does that mean? They are rewarded double. So those people who reported you did a whistleblower job, they will get double pay, better than what you pay them. They have to work. But this one, they just sit around and wait. Then they will get paid. So with that said, and you want to make sure that you hire people properly, and just don't even do it. I don't care what you tell me about, then I don't have employee. I don't think so. And if you do that for one, you're going to open up a gate for another one, and you're just going to attract people like that. But if you're doing it right from beginning, and you will attract people who do it right with you. So business owners, and I feel you, but I want to make sure that you listen to me. And do not get yourself in a situation, give such a great benefit to the whistleblowers. It's not worth it. All right. I say that because DOL audit largely coming from whistleblowers. So you can see why I care about talking this kind of cases. So those are the example. What kind of business will get audited more? Daycare facilities, restaurants, garment factories, healthcare agencies. So here you go. So make sure that you're paying people right, you're paying them on paper, and if you just don't have enough money in the bank, you have to bring money into the bank to pay them. Still, you're gonna deposit the money in the bank, and label that properly is not coming from the sales. Then you pay your people, but don't exercise on cash and paying them. You think you paid them, and you have no record you paid them. So don't do that. All right. So examples of what DOL is looking to find. So failure to maintain record of overtime payment to non-exempt employees. Non-exempt employees are hourly employees. In the restaurant, you should not have any non-exempt employees. Other than those huge restaurants making $10 million a year sales, they have managers, assistant managers, that I understand, they are exempted employee. Other than that, everybody from cook all the way to busboy girls, and they should be non-exempted. So that means you need to have overtime tracking on there. Salaried employees classified as exempt from overtime, so you want to be careful who you can put as a salaried employee. Not all the employee can be salaried, right? And in the professional firm it's different, but in the restaurant manufacturer, most of the people should be hourly employee. Unlawful deduction against employee from their wages, like you want to take their uniform money out, you want to take their, they ride with the boss, so the boss take $3 each trip out from their salary. No. You can't take anything out from the salary. Even if they're renting your place, you want to give them the salary properly, and you want them to pay you rent separately. You don't deduct that from your salary. Don't even try to do that, because those are the places which DOL will deny you, and then that means you owe the worker that much of salary. Imagine times 2, that's how much you're going to end up paying. Insufficient tips that fail to meet employees' obligations. You know that the tip employees, they need to make enough to be above the minimum wages. So those are areas the DOL would look to find. Inaccurate wage payment to immigrant workers or minors. So just be careful. I cannot say enough. And I just not too long ago, I think last week, and I was talking to a business owner, then he was telling me that how difficult to hire people, and some people would not want to pay, would not want to get the full salary. They want to get part of it, part of cash. So it's like making it very difficult. And I'm saying my answer. And you're always going to find people who want to work for you but want to do the wrong thing. That's just how humans are. So you know that you attract who work with you. So you want to attract the positive energy. You want to attract the people who are scared of doing anything wrong. And you're always going to find people who are so brave, they disregard the law, they just don't care. But if you are not that kind of person, and you don't want to have that kind of person working for you. So I say that it is the business owner's responsibility to find the right worker to work for you. It is not you can't find it. It is you don't look for it. So with that said, when DOL come to audit you, that shouldn't be DOL's problem to find you. That should be your responsibility to make sure that when DOL come, they walk away without any problems. And if you may say that, well, did you see that ever happen? A lot. A lot of companies get audited by DOL. DOL walk away without finding anything, especially those whistleblowers and who are doing wrong thing. What can DOL find? They will come and realize that you're doing it all right. So, small business owners, I know who you are, and I understand you, because we have that many people just like you. But I want to say that finding the right worker is really your job, and you want to attract the right people. How to prevent? To be successful in your business, you have no choice but follow the rule and regulation. See, I don't even have a magic. But for me to say that, I felt like when I say to my business owners, telling them that, okay, you really need to follow the rules, I felt like the acceptance rate when I approach people is very high. I really do not have many people when I tell them, let's just not do that, it's not right, let's do this right thing. And we'll find proper ways to save taxes, but don't do this. I always get very, very positive confirmation from our small business owner. Goes, oh, I didn't know that was not right. I'll do this way, Ying, and I trust that this is a good advice coming from you. So a lot of time it's not because our folks want to do it wrong, it's our folks don't have any other ways to do it differently. They don't know that was wrong. They didn't know there's other ways. This way is not appropriate. So it is not all the audit. Even if you owe a lot of money to the government, you get penalized. That doesn't mean you are a bad person. That just means that somewhere, somehow, and you did not bring that awareness to your business so high that you would be doing it differently. So for our audit, I always do my very best to steer the audit away from criminal investigation, because I do not have clients who are criminals. No, I have good clients. Maybe they have a language barrier and doesn't speak English or Chinese with me, so I didn't understand them totally. But I felt like, all of them, as long as they are cared professionally, and they would do a really good job, and they would not end up in the wrong place and being audited and lose all their belongings. So with that said, folks, and I just want to make sure you know that when you are in business, you need professional help. And maybe your son and daughter can be that one, but you need one. All right? And you're so busy with your real business, these type of compliance, accounting, tax, let someone else manage it. And you can grow without worry about being caught, right? And, for DOL audit, you cannot control your employee, I understand, okay? But you want you don't control them, but you want to select them. And not everyone can be your employee. And you want to make that clear, and you only accept the one that really knows how to follow the rules. And work with your payroll company and make sure you ask questions, getting all the forms filled up, so that way you don't end up getting a I-9 audit from DOL. That's scary too. They want you to produce those documents in an hour or two. If you never have them, you're not going to be able to come up with that, okay? And engage community CPA. We can do compliance review for you. If you're not comfortable, you can call us up, goes, I want to do a compliance review for DOL audit on Fair Labor Act, and can you do that for us? We'll do it for you. And I would be so pleased to do that, because I know it will help a lot for growing your business. So the last one, but not the least one, it is what I call audit tax, payroll tax audit. Is a reclassification audit, employment tax audit. It is 941, 940 form audit. Okay, it's all kind of in this category. So I can show you. And okay, so I forgot to most audited area. So never mind. And I have a slide that I don't really need it. But here, so in the payroll tax audit, there is a thing called workforce audit and IRS reclassification audit. They're the same kind of audit coming from different government agency. The one on workforce audit normally is conducted by the state, right? The state employment insurance agency would come to audit you. The purpose of their audit is to make sure that you got all your worker listed, so insured. And that audit typically very straightforward. They look at your 941, look at your worker to make sure it's reported to the state. Then they look at your general ledger to make sure that there is no vendor like under a person's name where you pay payment to, but they are not really on the payroll. They are not insured for employment. So that is a very straightforward insurance payroll audit. But the IRS audit could be a little tricky, because they can audit not only 941, 940, they also audit you for W-9, which is the contract labor side of audit. That one has a big penalty if you don't. So you may say that, well, I don't really know how much money I paid to my contractors, so that's why my number is estimated. It's not the right one. And you can be sure that if you do that kind of thing, and you will be audited 100%, because the worker who works for you, they're going to report you on their 1040, on their personal tax return, saying that they received $10,000 from you. But here, and you didn't issue a 1099, IRS didn't see a 1096, that's an immediate big red flag, and bigger than any flag you see. So it will be triggering the IRS to look at you. So you want to make sure that you have your 1099 people fill up the proper contractor contract with W-9. So all of these things, and you want to follow through to prevent yourself getting into the trap and paying a whole bunch of penalty. We cannot deduct the penalty as your business expense, right? If you pay $30,000 penalty, and that I cannot take the $30,000, deduct your profit, goes, oh yeah, the profit is zero now because you paid $30,000 penalty. No. Penalty cannot be deducted as a regular business expense. What is the trigger for payroll audit? So disgruntled worker, I talked about it, and they can, go after you. And you also could be, could be workers that you hired for from the foreign country to work on your job and remotely in India for your company. And these people supposedly to have a proper identification and what they do for you, and to have a proper withholding if it is needed. So you really need to file certain forms and to get them identified. Form SSW, SS-8, determination of worker status for purpose of federal employment tax, income tax withholding. This is a useful form which any workers you don't know whether they should be your W-2 or they should be your 1099, you use that. You know, we have two types of people working overseas, right? One type of people, they are U.S. citizens. They go out to the country, to India, they work for your company. So they are here getting your W-2. But you also have the workers from India who is not even U.S. citizen, just working in India remotely. So these are totally different treatment on payroll side of world. So you want to know how you work them through. If whenever in doubt, you don't know, you can call IRS. You can call IRS, you can look at that SS-8, you can call community CPA, and there is a 20-factor test that they call that common law test to figure out whether the people are supposed to be on W-2 or on 1099 or not on anything. You know, there are workers you can have, they're not on anything. So just make sure that you know these differences so you can do your payroll side of work properly. When you get audited by the payroll auditors, and they will ask you that question, why is John Smith are treated this way? And then you know why, because you have that proper classification. Prevention against payroll audit for all businesses. You know, for all businesses, if you have a business, someone should be working as an employee. Am I right? So this is really important. Sometimes you say, I don't even have payroll, so I am not going to have a payroll audit. That's not true. You're going to have payroll audit because you have a viable business. You're running profit every year, but your payroll is zero. No. You have to have an employee when you have a business. Unless you are the only employee, your business is running underneath and is on negative, then of course, then you may not need to run payroll. So just keep in mind, payroll is something that you should do as long as you have a business. And for hires, they must be employees if their skill is in line with the nature of the business. What I'm saying here is, let's say you have a drywall company. You put up drywalls, your construction company putting up drywalls. And all of your drywaller, these people are your employee because your business nature is drywalling. But if you also do cleaning, you say that cleaning job is actually subcontractors of mine, that's okay because that is not your core business. Just like community CPA. If you got accountants doing accounting, you don't have accountants who is subcontractors. They're all employees. So this is what we are saying is when you get audited, a lot of time the argument is not there for our client because they are a restaurant, then they pay the chef as a subcontractors. That doesn't make sense, right? Because that's the work. That's the line of work. So everybody should be employee. You know, of course, having employee is expensive. Of course. That is why you need to understand how much cost you have to run this business with. Then you come up with appropriate price. Otherwise, how do you charge your client? You cannot be beating up Walmart. You can't beat Walmart. They're just going to be the cheapest place you go, right? And I can't beat some one-person basement run CPA firms. I just can't beat them because they have no overhead. But then again, and you just have to know that under these kind of people, and when they are in business and they have, you have expenses. And the bigger you are, the more expenses you are, payroll is expensive. And you're going to pay. And you will plan your business in such a way that you will be handsomely, easily running your payroll. You can do that. And we can help you do that. We can do analysis on your number and tell you that what is too high, what is maybe low, and what you can do, which area you do great, which area you need to improve. That is what we do at the year-end tax planning time. We really look at the business in totality to come up with ideas on how you're going to grow it. Have all of your contractor present to you his or her business registration, insurance, contact, that business card. If you have a contractors, you better treat them like a business. So they need to have these items. Business registration and insurance, those are key for you to have them. And I will talk to you again on Tuesday. And on Tuesday and Saturday are my time to talk to you about the knowledge we can share with you. I'll see you on Tuesday. Bye-bye.